Legal tax loopholes that you should know about. The first legal tax loophole that you should know about is trying to limit your capital gains tax. And so if you have a bunch of securities that at the same time you're interested in making a donation of some sort to a charitable organization, you can consider donating these securities that have appreciated over time to the charitable organization, such as a foundation. In this way, you don't get taxed for donating securities to foundations. So in that manner, in that way, you can limit your tax liability on capital gains tax. If you're expecting a large capital gains tax on securities that have appreciated, you can limit that by making a donation to a charitable organization such as a foundation. So if you're thinking about making a donation to a charitable organization, you can limit your tax liability and do it for a good cause. Hey guys, just so you know, this is not financial advice or legal advice. We certainly encourage you to consult an attorney or a financial advisor to be clear on the tax implications. You can also follow along with an article in the description below. So the second tax legal loophole that you should know about is donor advised funds. And it's a way for donors to set up funds that are going to be donated to charitable institutions in the near future. So in this scenario, you would have an idea that you would be donating funds in the future to several organizations or just one. And you would set that money aside in a donor advised funds through a banking institution. The advantage to doing something like this is that you get all of the tax break for those funds that are donated upfront, and you can spread out the donations over time to whom you want and when you. So this is a good way to plan for retirement, because if you're in a higher tax bracket right now, then you can take advantage of the larger tax break, as opposed to later on when you'll be in a lower tax bracket and you won't be able to take full advantage of the tax breaks. So just a reminder that there is a 30% AGI cap for securities donations to charitable organizations. However, you can include a cash donation with securities donations to get a larger tax break. So that means that you're donating, in addition to donating securities to foundations or other charitable organizations, you can include a cash donation to maximize the tax break. The third legal tax loophole that you should know about is the ability to carry deductions for charitable donations over 5 years. And that means that the donation that you made exceeds the charitable deduction of 30% AGI or 60% AGI, depending upon whether you're donating cash or securities, then you can spread that deduction out up to 5 years. So that's important to know. And it's a way that if you had, say, a large amount of income in year one and you wanted to take as big a deduction as possible, you could do that by offsets of charitable donations and take the largest donation possible, which you're required to do under federal law. But if the deduction didn't cover the entire donation, you could spread that out over 5 years. And lastly, things to keep in mind as you're considering tax implications, there are other ways to offset income. And certainly you can do that in a number of ways, but two scenarios that tend to pop up: an array that you want to convert from traditional IRA to a Roth IRA, then you might have unwanted or tax that you weren't expecting. In that scenario, there's ways to, if you make charitable donations, it might offset that income. In addition, if you were rebalancing your portfolio, then you can make charitable donations to offset any tax that you were going to incur for that as well. Hope this information was helpful. If you're interested in making first-time donation, you can watch this video here. Or if you're interested in going directly to the link to make your donation, go to this one right here. Thank you so much. See you next time.